Hello. My name is David McGar. This is Property Value, where I talk about commercial real estate focused on South Florida. Let's read over some headline news today. First one out from the South Florida Business Journal. It says, exploring the explosion of single tenant triple net deals. So what does triple net mean? It means when the tenant is paying directly their base rent to the landlord, and all the expenses are being passed through to them. So the landlord just takes their rent, it's basically hands off. This is by T. Corley for Lev. And by the way, today's March 24th, 2022. After the economic volatility that shuttered some retail stores, restaurants, and non-essential businesses in 2020, investors' confidence was shaken during the pandemic due to fears around performance. However, the faith was apparently renewed in 2021 as single-tenant triple net deals hit record highs. While the U.S. continues to feel economic aftershock of 2020, commercial real estate investors are now riding the single-tenant triple net wave. In a single-tenant triple net lease, the tenant is responsible for the taxes, insurance, and operating expenses, and in some cases, common area maintenance. Triple net properties are often out parcels or other standalone buildings within a retail strip mall or community center or power center. Common tenants include banks, pharmacies, quick service restaurants, which are called QSRs, convenience stores, and more. Gunnar Wilmot, a senior financing expert who works with the Lev Lending, spoke on the demand. Lev Lending is a new commercial real estate lender that specializes in permanent, non-recourse loans with rates as low as 3.25. By leveraging technology and experience, their team has been able to close deals in around 30 days. This lending service is under the umbrella of Lev, a company that is leveraging digital products to improve the process of commercial real estate transactions. Lev has brokered billions of dollars in loans, including hundreds of short triple net properties. Says, I quote, "We've definitely seen a huge demand in dollar stores and QSRs throughout the pandemic," Wilmot said. "These property types have relatively comfortable price points for non-institutional buyers. Grocery stores and pharmacies, on the other hand, have become expensive. What is it about single-tenant triple net properties that drew so many investors to these deals in 2021? One factor is that the triple net aspect makes these types of leases more or less hands-off for investors, like I spoke about in the beginning of the article. They also attract long lease terms, often from 10 to 25 years, so it's locked in for the potential investor, alleviating the chore of finding new tenants or the loss of income due to vacancy and uncertainty of how much your cash flow will be year over year. On top of that, the single net, triple net properties offer attractive yields. And with the President Joe Biden's threat of eliminating the 1031 exchange off the table, new and returning investors with an influx of capital are able to take advantage of historically low interest rates with confidence. Historically low, but going up, as we all have seen in the past month, and should continue to go up until 2023, as the Fed has indicated with their rate hikes. But the biggest contributor to the explosion of the triple net deals over the past 2 years may be the proven stability they are offered during the economic turbulence. More often than not, single tenant triple net tenants are stable corporate brands that sell essential goods, including convenience stores, pharmacies, quick service restaurants that offer staying power during the worst of times, which we called essential businesses. The Dollar General and many QSR concept, Taco Bell, KFC, for example, have proven to be very stable investments in the last 2 years. There are definitely great investments that still generate 5 to 7% returns in this space that can withstand very uncertain and difficult times, Wilmot said. The fourth quarter of the fiscal year is generally the strongest, and with a record high sales volume of single tenant deals, Q4 2021 was no exception. In fact, sales volume jumped from 24 billion in Q4 2020 to 36 billion in Q4 2021. That's a 12 million increase. Single tenant retail sale volume surpassed 2019 numbers, accounting for 20 billion, a recovery from 2020's downturn that sank to 13 billion. So what does it say? 2020, 13 billion into 36 billion? That's a double. The 2021 numbers are the highest in the past 15 years. Single tenant triple net industrial and office deals also saw 15 years high in 2021. Says if you want to join the bandwagon, hop on sooner rather than later. The Federal Reserve has signaled it will likely begin raising interest rates, or continue, I may add, to increasing interest rates through 2023. And since we're talking about interest rates, let's go over to this next article that I was reading this morning. Here we go. And it states, bring this up full screen for you. It states Fed's Powell again raises alarm over financial stability of crypto products. So this is the Fed's yesterday speaking of cryptocurrency. Jerome Powell reiterated today that he reiterated yesterday that new laws may need to be drafted for the digital finance world. This is interesting. So it goes on to say, Federal Reserve Chairman Jerome Powell is worried about crypto again. The U.S. central bank chief reportedly said today that new forms of digital money, such as cryptocurrencies and stablecoins, present risk to the U.S. financial systems, according to an AP report. Therefore, new rules to protect customers will be needed, he said on a panel organized by the Bank for International Settlements. Our existing regulatory frameworks were not built with a digital world in mind, he was quoted saying. Stablecoins, central bank digital currencies, and digital finance more generally will require changes to existing laws and regulation, or even entirely new rules and frameworks, he said. There are potential financial stability concerns for some products, Powell said. We don't know how some digital products will behave in the times of market stress. The AP added that Powell said cryptocurrencies have been used for money laundering and other illicit activities, and that governments ought to work to prevent this so that products that do provide value to consumers can gain wider adoption. Powell, who has been the Fed's chair since 2018, has long been concerned about cryptocurrencies. Most recently in January, he said managing the risk of stablecoins was a very high priority for the central bank. Stablecoins are cryptocurrencies whose prices are more stable than well-known digital assets like Bitcoin and Ethereum. This is because they are pegged to fiat currencies like the US dollar and the euro, and many of them claim to be backed by fiat reserves. So the central banking digital currency, they call it the CBDCs, are different. They are digital versions of fiat currencies, but are regulated and centralized, with the country's central bank backing them. Governments around the world are in different stages of researching or implementing them. China is well ahead of the game, and in January released its digital yuan wallet. But the U.S. has been slow to move ahead with one. And Powell reiterated today that the central bank was only at the beginning of this journey. Let me read this again. So China has already released theirs. The U.S. said we're only at the beginning of this journey, playing catch up again. And it goes on to say, and still hadn't made a decision on issuing one just yet. Powell has been saying since last year, since 2021, that more research was needed on whether to give a central banking digital currency to the American public. We'll keep you posted on that. It's very exciting. What will Powell do? And this is going to happen. This is the future of currency, and we're watching it roll out in front of us. Again, as it happened in the 90s, where we saw the computer, the personal computer rolled out. This is just another part of it. So, for my last article, speaking of digital, this is Redfin. I don't even know if anyone ever uses Redfin anymore. I don't use Redfin. But it's interesting what happens at the end because I do use CoStar. Let's read on. Redfin winds RentPath assets with rental search platform. Platform launches new feature after $600 million acquisition. This is on the Real Deal South Florida on their national news by Sasha Jones. There you go. It goes on to say, Redfin this week launched its first nationwide rental search, allowing consumers to search for both rental and for sale listings on the platform. The Seattle-based company's newest search feature is powered by listings from RentPath, which it acquired for $608 million in cash in April 2021. Under the acquisition, Redfin gained control of RentPath's subsidiaries, including Apartment Guide, Rentals.com, and Rent.com. Most people, I quote, who are considering renting a new home in the next 6 months say they are also considering buying, Christian Tubman, Redfin's chief growth officer, said in a statement. Redfin gives everyone the tools to win the place that's best for them, whether that's a place to lease or buy. The platform is a search similar to that from competitors like StreetEasy and Apartments.com. Apartment.com is the one I usually use, or Realtors.com. Prospective renters can see updated listings, search with tailored filters, including budget, location, pet policy, and connect with property managers. Searches can also return photos, floor plans, and 3D tours. Through RentPath property managers, RentPath property managers will be provided with a suite of online tools that they can use to communicate with residents and market properties through targeted digital advertising, social media, and online reputation management. Redfin's acquisition of RentPath ended in an otherwise tumultuous 14 months for the company. RentPath filed for Chapter 11 bankruptcy in late February 2020. That same month, CoStar founder and CEO Andrew Florence announced his firm's plan to purchase RentPath for $587 million. But the deal drew scrutiny from the Federal Trade Commission, which sued to block it late last year on the grounds of unfair competition. In December, RentPath pulled out of the agreement, prompting a standoff between the two companies over a $60 million breakup fee. In March, a Delaware bankruptcy court ruled that CoStar would have to pay $52 million of that fee. So I guess I'm going to go check out Redfin and see what all the hoopla is about. Sounds pretty cool. Sounds just like any other search engine for real estate, single family homes or rentals or apartments or condos or townhouse that is available online for us already. But let's check it out. Maybe they're one of the pioneers. Who knows? Doesn't hurt to look, right? And let's go and see what's going on. Always like to check in since this thing is so volatile nowadays. Wall Street Journal markets, U.S. 10-year Treasury note, 10.374 continues to climb, and we'll continue to watch it. I'm David Mugard. March 24, 2022. Have a great day. See you tomorrow on Friday. Have a good one.